How's it going, friend? Before you invest, hear me out. Make sure you get your house in order. Get your affairs in order. All right. You got to be prepared, right? Like they say about success or luck or something like that. It's where opportunity meets preparation. And that's where you need to be, okay? Because once the real estate market changes and the properties are selling like hotcakes at a discount, you want to make sure you're prepared to be able to qualify to purchase these homes, because we're slowly transitioning to a buyer's market. We're departing from a seller's market, and the seller's market is determined by the sellers having the control, meaning they're able to dictate the price and the terms in the marketplace. But now we're just transitioning to a buyer's market. The buyers have the control, where we get to negotiate the purchase price and terms that we want, mainly because of the rising interest rates, and that a bunch of homeowners are not able to qualify for mortgages, or may not even want a mortgage because they might not be able to afford the mortgage payment if it's at 6.5% interest rate. Okay, and I'm talking about mainly people who are buying properties for owner occupants. But as investors, if the interest rate is higher, right? Let's say it is 6.5%. We want to make sure that the deal still works. At the end of the day, it's not you who's paying that interest rate, even if it is 6.5% or higher. It's your tenants. So you always want to be mindful of that. So why do I share this? So you want to make sure that you're prepared when this happens, when this shift happens in the marketplace. Okay. Now, these are the things I'm going to outline to you to make sure that you prepare to get your house in order. Okay. Because the main thing is to qualify for the financing to buy these properties. So let's break it down. One of the things you need to do to get your house in order is, in order to qualify for a mortgage, you got to make sure that your credit and your income is intact. Meaning, you got to have a certain credit score, you got to have a certain debt to income ratio, and you got to make sure you have documented income. So that way you can qualify for mortgages, plural, on repeat. Because as an investor, you want to make sure you get qualified for a mortgage, so that way it covers, let's say for investment properties, 80% of the purchase price. So you want to make sure you reach out to a mortgage lender, because each mortgage lender has their own criteria for qualifying a borrower for their mortgage product. So I'm not going to share with you what you need, but well, maybe I will. All right, maybe I'll just give you some benchmarks. Well, we're seeing in the market, but it may change based upon your area, your location, what you bring to the table, the time you watch this recording. So just always keep that in mind. But if you want the details, reach out to a mortgage broker. But in regards to your credit, you want to aim for at least a 680 credit score. Some mortgage companies can get you qualified for a mortgage with less, but ideally for the best terms, you want to get a 680 score, meaning your middle score. That's what most mortgage brokers look for, your middle score. Now, I said credit. Next thing I shared to make sure you get your financial house in order is your debt to income ratio. Now, that may change. It might be 40% or so, but you just want to make sure you reach out to your mortgage lender for more details. And last, documented income, meaning do you have documented W-2s, 1099s, tax returns, bank statements, just some sort of document for the past 2 months, 2 years, 3 years, just whatever that mortgage lender requires that proves you have some income coming in. Because that's what mortgage brokers like to see. They like to see what's called global income, meaning if this person, let's say if the property ends up taking and it's not cash flowing, does this person have enough income outside of the rental income they're receiving from this property to afford this mortgage? So that's what we mean there, okay? Now, that's what you need to do to get your house in order, okay? Just focus on the mortgage aspect. We talked about credit. We talked about debt to income ratio. We talked about documented income. The other thing you need to do to get your house in order to prepare for this transition in the market, go from a seller's market to a buyer's market, is you want to make sure you get your down payment money in order. And when I say down payment money, I'm actually missing out on a few other things that's important as well, such as your soft costs, meaning the costs you incur before you buy the property, such as, affording property inspections, appraisals, getting an entity form, the fees that you pay in that regard. That's what I mean by soft costs, but also your closing costs. Because of course, if you're buying a mortgage, as I shared, the mortgage broker eventually got to get paid. They get paid at closing. The real estate attorney, settlement company, the real estate agent, all these companies and people, they get paid at closing. Okay, so you want to make sure you have enough money, let's call it your total out-of-pocket costs, to cover your down payment, your soft costs, and your closing costs. So if you don't have that capital, no worries, we can help you with that. In regard to your out-of-pocket costs, just check the link below in the description to learn more. We'll place a free training, share with you about how you can get funding for your deals. Not just one deal, I said deals, plural, on a repeatable basis. Because that's the main focus that you should have as an investor. It's not being a one-trick pony. It's about having more than one source, as well as having a repeatable source of investment capital. Okay, so just check the link below to learn more. All right, so we covered so far making sure you have the mortgage, making sure you have your out-of-pocket costs. Another thing I want to implore you to do to keep your financial house in order is to network. Meaning, as you're ready for the market to change and these property prices start to drop and the market is in the buyer's hand, we get the best purchase price, the best terms, you got to make sure you have your network strong. As I shared about the closing costs, right? About your settlement company, your real estate agent, your mortgage lender, your real estate agent or your real estate attorney. I talked about property inspection. There's a lot of people in the industry. And if you happen to say, hey, Juan Pablo, I don't know any of these folks. You know, I never closed on a deal, or I might have closed on a deal or two, but I lost contact with some of the people I work with. Hey, well, now's the time. Prepare yourself. Get your network up. Start going to local real estate investment groups, join real estate investing programs, expand your network, build relationships with real estate professionals so that once you're ready, meaning you got your house in order in regard to qualifying for mortgages, you got your house in order in regard to getting a total out-of-pocket cost. So then when you have your house in order, meaning you have your network, your team strong, you can go on a rampage and buy properties left and right. All right, so these are some tips I just want to share with you guys as I share a free training for you. Just make sure you check the link below in the description because, hey, now's the time. You've been talking about financial freedom for so long. Things are about to happen for you. Believe it, have faith, but you got to make sure you're prepared. As I said before, I'll say it again. It's all about that preparation, meaning opportunity. The opportunity's around the corner. So make sure you prepare and get your house in order today. As always, guys, is to your success. Continue to earn passion, live passion. If you found any benefit from this video, make sure you like, share with people who can benefit, and subscribe. Peace.